Hi, good morning and welcome to Moneycontrol live stream. You're watching markets with Santo and CJ.
Yes.
So today is the expiry day of the current month FNO contracts on the NSE, and it looks like it's going to be a volatile session today. So CJ, where's your money on? Is it going to be more of short covering or unwinding of long positions?
You know, Santo, I think I'm going to stick my neck out here and, say that I do still feel that there is a possibility that we may see some bit of short covering coming later in the day. The momentum shifted yesterday towards the bears, but I am not going to lose all hope, especially when you look at the positive start that, Asian markets have had, and the sort of, although mixed cues from US markets, given that S&P and Dow Jones both ended higher, but the NASDAQ, the tech-heavy index NASDAQ, actually closed lower. So overall, I believe there is still hope for the bulls that we may close out this April derivative series on a higher note.
Well, that said, so it's still a market that's going nowhere, and I've been speaking to brokers and market players, and the general view still is that this is a market that's going to frustrate people for some time to come. It's a correction market, and whether now it will turn out into a price correction or a time correction, that's anybody's guess, but for now it seems to be clearly a market that's headed into time correction.
Yeah, enough of your skepticism, Santo. I mean, you've always been a skeptic. That said, I think it's time we'll quickly dive into, some of the stocks that we need to talk about. And there are a lot of stocks on our plate today.
Well, yes. So what do you have on your plate, CJ?
Well, start off with HUL, of course, the biggest earnings that came out, yesterday after market close. It's a classic case of a giant flexing its muscles. I mean, they have shown such resilience in a quarter which was marred with uncertainty on margin front, uncertainty on raw material prices. They took so many price hikes, so everybody was expecting a disaster for HUL. But they have come out with earnings that were better than expected on both PAT front and on the volume front, as well as margins declined only 20 basis points. The EBITDA margins of the company declined only 20 basis points against expectation of almost as much as 180 to 100 basis point decline. So HUL has basically flexed its muscle, undergone great amount of cost control, and at the same time ended up gaining a lot of market share. For me, that suggests to me that probably there is scope now for re-rating. Edelweiss Securities also said that this sort of earnings that the company has come out with makes it a classical defensive play now in the market, given that it has underperformed Nifty 50 over the past 2 years. If you look at this amount of underperformance, as high as 60% to the Nifty. So valuations are compelling, and with this sort of a resilient earnings performance, even though the management has guided that rural growth, demand growth is still a bit patchy and margin pressure will continue going ahead, investors can still take heart and probably look at HUL as a haven in a very volatile market.
Well, CJ, I'm not sure if it's the right environment for investing in high valuation stocks. Given the way the market has been performing, and with in an inflationary environment, and the fact that it's been now reflecting in the margins of FMCG companies, I think probably one needs to be a little cautious out here. Clearly, rural demand is still, the pickup is very gradual. It could take some more time, and also margins are likely to be under pressure for some more time because of rising input costs. So that's my quick take on HUL.
Just to counter on the valuations are always relative. They're never absolute. And if you look at where HUL used to be, in probably June 2020 when FMCG was ruling the roost, compared to then, valuations are quite compelling if you go by relative basis.
Okay,
so, yeah.
The next stocks on our radar today, tire companies did pretty well yesterday. If you look at Apollo Tyres, MRF Tyres, as well as Balkrishna Industries, all these stocks held firm in a falling market. Now, these companies had been underperforming for a while. There were a couple of reasons for that. One being that rubber prices were continuously on the rise. That was hurting margins. Besides, you had the semiconductor chip shortage with the automobile sector,
yeah,
which had led to a sharp fall in output. So these two factors kind of put pressure on tire stocks, and you saw them underperforming. But now that's changing a bit. One, rubber prices have stabilized a bit, so there's some relief on the margin front. And secondly, the semiconductor problem is also not as bad as it used to be till about 3 or 4 months back, and demand is slowly picking up there. Also, production is going up, and besides, the outlook on the rural sector is slightly better. indications are that the Rabi harvest has been, the sowing season is expected to be good. Monsoons are expected to be, normal. All factors put together, I think tyre companies could see some bit of outperformance going forward.
Santo, I will not be so quick to jump on the optimism bandwagon, here, because let's not forget crude oil prices are still boiling. They are still above the $100 per barrel mark, and they hold the key for tyre stocks for the time being. They will continue to hold key because tyre stock margins have come under pressure because of the rising crude oil prices. Why? Because crude oil is a very important raw material used in manufacturing of synthetic rubbers. And now we know globally 70% of the rubber that is manufactured is largely synthetic. So, and add to this, the concern after yesterday's move of Russia to, stop gas supplies to a few of the EU countries, it seems that the chances of further oil sanctions on EU are going to on Russia, beg your pardon, is going to rise. And once those sanctions come in, you may see oil prices shooting even higher. So I will not be so quick to jump on the optimism bandwagon here.
Well, okay. But the counter argument to that would be that, much of it is now reflecting in the prices. Probably the worst is already past, and you could see some bit of bottoming out here on.
We shall see. Bajaj Auto, well, the stock is likely to, surge today because of a stellar earnings performance in the March quarter. I mean, nobody saw Bajaj Auto coming out with this sort of number, but perhaps the past 2 days of rally was an indication that something was like this was, on the offer. If you look at, the sort of numbers that have come in, revenues and net profit have comfortably beat street estimates. Although revenue has declined on a year-on-year basis, if you look at it, but it's still above a lot of what, many of the estimates that the analysts were putting out. And overall, even from a technical point of view, at this point of time, Bajaj Auto is among the most bullish stocks out there you can get. I mean, most of the DMAs, stochastic indicators, all of the technical indicators that, traders will generally look at and investors will generally look at are blinking buy. And I will not be surprised as the stock is among the outperformers in the session today.
Well, the counter to that is that, semiconductor chip shortage is still a problem at this point in time. Although it has eased considerably, and being a premium player in the premium segment, Bajaj Auto is likely to feel the pinch more than others, and there's still the question of how much, to what extent it will be able to pass on the higher input cost on to its consumers.
So far it has shown the willingness to pass it on, and don't forget that Bajaj Auto not only depends on the domestic market, but it also has a great export business as well, and so far that business has been doing well and it will continue to do well. I mean, if you look at the demand that is coming out from Africa and other emerging markets for Bajaj Auto, things looking pretty. So it's not all domestic here that should put pressure on valuations of Bajaj Auto.
Well, third stock, Petronet LNG. The stock again was among the outperformers in yesterday's bearish session. However, most analysts are still guarded in their outlook for the stock, given that high gas prices are hurting volume offtake at Petronet LNG. There's been cutback in demand from both the power sector as well as industrial consumers, according to a report by Moneycontrol Pro. Besides that, the utilization rate at Petronet LNG's Kochi terminal has been subpar, and it will take some time for it to get that up. So till such time gas prices remain high, Petronet LNG is likely to face fair bit of headwinds.
Santo, again a bearish stock from your counter, but if you want a bullish stock to look at today, you should look at Trent. Another company that came out with its numbers yesterday, and it seems Trent is emerging out of the shadows of COVID stronger, fitter and bigger, right? Now the company has entered into a revenue run rate of more than 5,000 crores on an annual basis. The sales numbers and the EBITDA, operating profit numbers for the March quarter were significantly higher than what analysts were expecting. Of course, there was a little bit of disappointment on the margin front, but that is expected, given that now with stores opening, a lot of expenses have gone up. Plus, there was the initial threat of Omicron in January, so that also affected footfalls a little bit. But overall, if you look at the picture, being an apparel company, Trent is a direct play on the the return to offices, the the reopening of the economy, and with the wedding season upcoming for the next 1.5 to 2 months, you will see a lot of their sales going higher and higher. And I feel that there is a lot of room left still in Trent for further re-rating.
It's interesting. I mean, I could just counter you for the sake of countering it, CJ. But when you look at the 10-year chart of the stock price, it's been a very steady performer, and yet it surprises me that if you look at the earnings, the EPS, that has always been in a narrow band. I mean, you're seeing the top line grow, but somehow it's still not reflecting in the profitability, because of which the stock is optically appearing to be very expensive. It's been expensive all throughout, but I guess like some of these stocks, they just keep getting expensive all the time.
But it has also been a performer, don't forget that.
Yes.
I think before we move on to our next stock, it's time to look at how the market is opening. Let me just check my Moneycontrol app.
And it is a firm start for the day.
Yes, it is. It is significantly higher than what we were expecting, actually.
About 90 points up, close to 80 points up on the Nifty now.
Yeah, close to 300 points on Sensex. Nifty Bank is among leading the gains with a 0.4% uptick.
Even healthy advances to declines ratio as well.
Absolutely.
You've got about 1600 gainers to about 290 stocks which are retreating on the NSE.
And Santo, I mean, from the retail investors' point of view, the mid-cap index has come out, all guns blazing, higher by 0.9%. That is very, very healthy. It's almost outperforming the Nifty by a factor of 2 at this point of time.
So, this trader, who tracks this both mid-cap and small-cap indices very closely, so he was saying that, typically, when there is consistent outperformance by small cap over mid cap, which is the trend that we are seeing right now, it is probably time for a pullback.
Well, whether it is time for a pullback or not, but as long as mid cap and small cap keep outperforming, which it seems is very likely and is happening in front of us eyes, I think everybody will be happy. That said, just to look at a few of the buzzing stocks at this point of time, HUL has started off 3% higher, Santo. So yeah, it doesn't seem that market is that worried about valuation. Hindalco, some of the metal names are doing well. Hindalco is doing well, up about 1.3%. Bajaj Auto is higher by 1.3%. M&M, another auto name, a few of the auto names are doing pretty well. Hero MotoCorp, M&M, all are in the green at this point of time.
So it looks like, as CJ was saying, that it could be more of short covering of positions that you're likely to see today on the last day of the
FNO. You should listen to CJ more often.
Right. HDFC AMC, again, the stock reported its fourth quarter earnings yesterday. Not a great set of numbers. Already in terms of valuations, it is among the most expensive in the AMC space. So this set of latest earning doesn't really give much comfort to investors. Also, the big worry of the market is that HDFC AMC has been losing market share to its rivals. On the positive side, its equity AUMs is still higher, as a proportion of its overall assets when compared to the industry average. But the loss of market share is something which is worrying investors. Also, when you consider the fact that most of its equity schemes have been underperforming, so that then doesn't project a very pretty picture.
Hold your bearishness, Santo. I mean, okay, yes, the earnings performance for Q4 was not great. It was not swashbuckling. But if you look at the longer term, growth outlook for HDFC AMC, that still remains pretty sturdy. We have talked about low penetration of mutual funds. We have talked about how SIP inflows have been so strong and have been rising on a month-on-month basis. So that overall, from an industry point of view, and HDFC being among the top 3 AMCs out there, bodes well for AMC. If you look at even within SIPs, HDFC holds a pretty strong ground there, and SIPs tend to provide stability to earnings. They are generally not dependent on where the market is going in terms of sentiment. That said, lastly, when you come talk about valuations and you talk about equity scheme underperformance, yes, HDFC is one of the biggest factor why HDFC AMC was underperforming, is that many of its equity schemes were underperforming or lagging behind in the past 1.5 to 2 years. But the recent revival in value stocks and the recent revival in PSU stocks has actually resulted in an incremental improvement in the equity schemes of HDFC AMC, and I think that is where some of the valuation support may continue to come in for the company. Yeah, that's it. This is an interesting one. Bharti Airtel today, earlier this morning, BofA Securities came out with a report, and interestingly, it has downgraded Bharti Airtel to neutral from buy earlier. Although it has not changed its target price for the stock, that remains firmly at around 810 rupees. But why has BofA downgraded Bharti Airtel? Well, because the brokerage house believes that the earnings of Bharti Airtel are going to suffer, and they are going to suffer in the near term. Why? Because of high inflation. Diesel cost is rising. Now, telecom companies utilize diesel as fuel for running the towers, other expenses. So, A, diesel prices are rising. Second, with rural sentiment being as weak as it is, I mean, we heard what the HUL management had to say about rural demand scenario, and with high inflation also being there, it is very likely that telecom companies may back off from taking more tariff hikes at this point of time. What BOFA expects is that any new tariff hike would probably come towards the end of this year. So we may not expect a mid-year tariff hike from telecom companies, and that is a bit of a sentiment dampener for Bharti Airtel, given that its premium share of subscribers generally tends to benefited more when the tariffs are high compared to Vodafone and Reliance Jio. And it seems that according to BOFA, the valuation at this point of time are totally pricing in most of the positives, and therefore there is not much upside left. So if you are holding Bharti Airtel, or if you have invested into Bharti Airtel very recently, then it is very likely that you are in for some frustrating 12 months.
Well, simple counter argument to that, CJ, is that okay, there's some bit of short-term headwinds there for Bharti Airtel, but look at the telecom space today. If you want to own a telecom stock, how many players are left? You just have you just have 3.
And if you include MTNL, of course.
Of course. But among that, you have only 2 players which are in a really strong dominant position, right?
Yeah.
You have to choose between either Reliance or Bharti. So even if there is some bit of headwinds, I don't think investors have much choice as far as telecom stocks.
But it's not necessary for investors to be in telecom stocks, right, for the next 12 months. They can always shift to commodities, or maybe shift to some of the defensive names that you are so fond of.
Yeah. So CarTrade, I think this is a very interesting stock. Probably CJ should have been the one talking.
A new-age technology stock on Santo's radar. Can you believe it? I have actually converted him.
Yes.
I have actually converted him.
Become a believer after chatting.
Welcome to the church.
So CarTrade is the stock had a disastrous last 1 year. It debuted with a lot of hype, but it's fallen by more than about 50% from its IPO price, and now finally some people seem to be turning positive on this stock. Last week, Kotak Institutional Equities had come out with had initiated coverage on CarTrade with an ad rating. And now Nomura has also come out, has started coverage on the stock with a buy rating and a price target of 770 rupees.
That's what, an upside of 22% from current level?
It's about 629. Yeah.
Not bad.
And now Kotak's argument is that this is a steady growth business, and it sees about close to 22% CAGR in revenues between now and FY25. And Nomura too is of the view that there is scope for margin expansion, and it offers value at current levels.
Santo, I will not be surprised if others also join Nomura and Kotak into CarTrade, because the arguments they have made are totally valid. And yes, valuations, when the IPO came in for a loss-making company, there was so much of jitteriness. Valuations were probably unpalatable at that point of time. But now, given some of these new age technology names have seen correction of 50 to 60%, in some cases even 70%, I think probably the fundamental case will now come forth, because valuations have become much more palatable for investors to look at it from a very long-term perspective.
Well, that said, what's the next stock?
Indian Hotels, Indian Hotels. It was supposed to be the stock of this quarter, right, Santo? I mean, we talked about this stock earlier in the show as well, how, reopening has been happening, people are going out on vacation, hotel occupancies have been so strong. You would naturally assume that Indian Hotels will come out with a blockbuster earning, it will, blow away analyst expectations. Well, on the surface, yes, the company has reported profits. The growth is largely very strong compared to, given that in the year ago quarter it had reported a loss. But if you take out the other income, which is largely not a business thing, and if you take out the one-off gains that it has seen, the company has actually reported a net loss of 40 crores. In a quarter where hotel businesses were supposed to be shining, Indian Hotels has just thrown a howler at everybody, at investors. And I will not be surprised if the stock would be plumbing the lows today, because of just the sheer amount of disappointment that the earnings have brought out. Overall, of course, if you look at from an operating point of view, And if you look at it from a hotel openings point of view, yes, there is some cause for optimism. Their operating performance was pretty strong, so it shows that they were able to manage their cost pretty well, even in a very inflationary environment. And hotel openings were pretty strong. So maybe going ahead, it may start trickling into the revenue performance, and we may see some revival in the quarterly performance in maybe June and September. But yeah, March quarter earnings were just so bad.
So that's the problem, CJ. I mean, yeah, it is a long-term story very clearly. I mean, of course, we did see a turnaround starting to happen, but now it's only going to pick up pace from here on. So you're expecting probably too much from just one quarter, and anyway, it's the April to June quarter which is typically more strong for hotel companies. And as you also mentioned, we could see those numbers start trickling in. Besides, the company has managed to cut down on debt, and its books are in much better shape than what it was till some time back.
Yeah, there is a lot to like about Indian hotels. That is true. But I hope that your words will provide solace to Indian hotels investors today. But I really don't see any room for that, at least not today.
Yes. Well, with that, we'll let you get back to your trading terminals. Market continues to remain strong at this point. The Nifty at 17,000.
We are holding off at we are holding steady to the opening gains that we start. I think Sensex up about 0.4%, Nifty is around 0.4 to 0.5%. So holding steady. Hopefully, it stays this way throughout the day. Yeah.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and please do share your comments on the show.
And do follow us on the social media links at the bottom of your screen. We will catch you live again at 3 p.m. when we wind down the day's action. Stay tuned to the moneycontrol.com as well as the Moneycontrol app for the rest of your news. Thank you for watching, and see you soon.